Hi guys, following off my last video last week, today we're going to quickly dive straight in. We're getting a lot of questions around how are our two states performing. Transact Capital is operating in both WA and Queensland. We are regularly down in Sydney and Melbourne once a month. I'm in Queensland once every couple of weeks. Quick couple of notes to take point out before we follow on is that Queensland is a three-speed economy. Agriculture, tourism, mining helps smooth out the boom-bust economy and it gives it that steady growth. And there is a 5+ million population in Queensland, which gives it the densities. And we'll talk about the interstate migration and affordability later on. WA is purely dependent on the mining sector. No matter what anyone says, it drives all our labour, all our employment, all our growth. And because it is such a boom-bust economy, it does impact significantly on leasing transactions, retail market, discretionary spend. What we are seeing right now in WA is we are having a massive cry out for leased investment stock, whether it's instos, it's funds, it's syndicates, it's high net worth individuals. Our sales transactions have gone through the roof this year. Our leasing, however, and we predominantly deal with large format retail and national tenants for industrial properties, that has dropped off significantly, and that's purely relating to the performance of the economy. And as we know, there's no hiding. It has slowed down discretionary spend. We are extremely affordable in WA. Interestingly enough, we have the highest delinquency levels on record for a while, which I think is starting to change as we're starting to see the green shoots come through. We've also got good growth projections. There's over $100 billion. I think the latest stat is for mining projects, which is going to fuel our growth here. Sales and leasing, we've got a lot of leasing opportunities in Queensland. There's a lot more activity. There's a lot of deals getting done a lot faster with the major groups. In the same respect, sales are also achieving great results. And interstate migration is driving a lot of growth in Queensland. Sydney and Melbourne are so unaffordable right now. And, geographically, Brisbane's so close that we're seeing people drive, and that's going into residential apartment projects. That's going into leased investments. We're seeing a lot of the funds and institutions who are paying such a premium yield in Sydney and Melbourne now migrating to Brisbane and look at those counter-cyclical plays. We're seeing more of the funds and syndicates dominate though in that Queensland market, WA, we're still seeing the high net worths have a lot of movement, but we're also starting to see a trend now, counter-cyclically, funds and syndicates we deal with on the East Coast, asking the big question, have you got assets, 30+ million, $150 million, and we're now looking to transact those privates and trade those assets into funds and syndicates. Thank you.